Hi, and welcome to Real Talk with Sesta. So today I'm going to answer that question that I hear almost on a daily basis. Is this the right time to buy? Don't go away. And welcome back to Real Talk with Sesta. So today, I'm going to answer a question that I hear almost on a daily basis. Is this the right time to buy? Well, let me start out by saying that there's many things to determine if this is a good time to buy or not. It's hard to answer that as a blanket. But today, what I want to talk about and bring to your attention is interest rates. Because I don't think people realize that the interest rate that we have currently right now, which is just over 3%, is historically low. Chances are that this is not going to happen again in our lifetime. So I want to talk about, where our interest rates are and how that affects your buying power or your affordability on a house. So today we're going to talk about if you got a loan for $250,000, we're going to use that same amount throughout all the examples so that you can compare apples to apples and you can see what I'm talking about. Before we get into that, I want to show you the historic data chart of interest rates. So don't go away. Okay, so here you will see a chart that goes back as far as 1975 till today. And if you notice in 1975, the interest rate was about 9%. Then all of a sudden in the 80s, 1983 to be specific, that interest rate shot up to as much as 19%. And it's kind of dwindled down since then. But if you notice by the chart going back as far as 1975, for the most part, our interest rates here in the United States have hovered between 5 and 9%. Well, right now, we're just about 3%, just a little bit over 3%. What a huge difference from 9%. I remember in the 80s when I first bought my house, I was paying 10.5% interest. So huge difference between then and now. So I want to give you some examples on, again, a $250,000 loan amount and what that means to you as far as interest rate. So, okay, here's the example. So you get a loan for $250,000, okay, at an interest rate of 3.2%. Your principal and interest payment is going to be $1,081. Okay? Real simple. Principal and interest, $1,081 today. So let's say we decide, you know what, housing market is kind of hot. I want to wait a year, see if the prices go down. And let's say we waited a year, prices haven't gone down, and let's say even they stayed even, which I don't think that's going to happen, but let's just say, for the sake of example, that, the houses are going to be $250,000 a year from now. But let's just say the interest rate goes up to as high as 6% by the end of the year, which some people are predicting at least 4 or 5%. But let's just, for example, we wait a year, goes up to 6%. That same loan amount at 6% would cost you $1,499 a month. That's an increase of $485 a month more than if you would have taken out that loan today at 3.2%. Okay, so let's say you're telling me, okay, Andrew, I'm thinking next year, that same $250,000 house is going to go down to $200,000. Okay, so that's a $50,000 savings as far as price concerned. But let's say that does happen. But let's say the interest rates are 6%. So at 6%, your monthly payment is $1,199. So it's still $118 a month more than if you would have bought that house at $250,000 today. I bet you're shocked to hear that. I've told people that over and over, and when I bring those numbers out, they're amazed. Okay, so you say to yourself, well, Andrew, I don't know if the interest rates are going to go up or down, But, 250,000 I think is just crazy right now. So I say to you, okay, so where would you feel comfortable buying that house? Say, well, I'm thinking about 180,000. That's where they were a couple of years ago. My mother, brother, sister, cousin bought their house then, and they only paid 180,000. Okay. So let's say you paid 180,000, but the interest rates at that time was 6%. Your monthly payment at 180,000 at 6% interest would be $1,081. The same as if you bought that exact house today at 3.2% interest for $250,000. You don't believe me? Pull out your calculator and do some calculations, but that's exactly what it comes out to. So my point is, those of you that are waiting for the housing prices to go down, you're gambling on two things to happen at the same time. You're gambling on, one, that the values go down, and you're gambling, two, that the interest rate stays the same. If you talk to many experts, they're going to tell you that the likelihood of that happening are about slim to none. So right now the market is hot. The values are going up almost monthly, and that interest rate is starting to rise little by little. So by next year, this time, we won't be surprised if they're at 4%, 5%, 6%. So that's something to really, put a pen to paper and do what I did and see if that makes sense to you. Okay, so let's just put all that aside. So what is the alternative if we decide we're going to wait a year and we're not going to buy? Is it paying rent? Is it staying in the house that you're currently in? If the values go down and you're waiting for, to buy something when the values are down, the house that you're in is going down as well. Does that make sense? So what if your property goes down, the property that you're looking to buy goes down, but the interest rates go up? Again, it's a real gamble here. So my point is, take advantage of the interest rates that we have now, because again, I don't think we're going to see that come back anytime soon. And I really don't think that those interest rates are going to remain this low for a long, long period of time. History will show you, if you look at the charts, that again, 5 to 9% is kind of a normal. So interest rates can't stay this low forever. And what is the alternative? Okay, I'm going to sell my house because the market is hot and I'm going to get top dollar. But I don't want to buy yet. Okay, so what are you going to do? You're going to move in with family? I don't think that's going to happen. So what are you going to do? You can say, well, Andrew, I'm going to bank all the money and I'm going to go rent. Okay. So the average rental amount here in our area, let's say it's $1,500 a month. $1,500 a month times 12, that's $18,000 that you have no return on investment. By the end of the 12 months, you're handing back the keys or you're renting out for another year and spend another $18,000. So you're going to wait 2 years for the prices to hopefully go down, for the interest rate to hopefully stay the same, and lose $36,000 in the meantime? Just doesn't make sense. So there's so many good, positive things about home ownership. Talk to your accountant. There's, write-offs for interest possibly, and I'm not going to get into all that, but there's so much more advantages of home ownership than there is to rent. So I just kind of wanted to make this video to open your eyes, where don't just focus on the amount of the home, focus on affordability and focus on that monthly payment, because that's what you're going to be paying month after month after month. Once you lock in that 3% and it's fixed, it's not going to change. So, 2, 3, 4 years from now, if that interest rate goes up, you're locked in. But if you wait, you're gambling. And again, you're gambling on a couple of different variables. So I hope this video helps to make that decision a little bit easier. I know the market's really hot, the prices are going up, but take a look at what it's going to be costing you on a monthly basis and the gamble that you'll be taking if you're going to wait. Well, I want to thank you again for watching Real Talk with Sesta. You'll see my contact information below. Please give me a call, a text, or an email, and reach out. I would love to help you on a personal one-on-one basis. Because again, making a decision like this is a big one. And I understand people getting cold feet. But, you know, you really, really need to put the pen to paper and do some calculations, because there's so many different variables. And, you know, waiting for that perfect storm or that perfect time to buy is kind of hard to pinpoint. But these interest rates, can't stress that enough, these interest rates, I just don't think, and many experts don't think it's going to be around for too much longer. So I hope that was helpful, and please come back.